Okay, so I wanted to record you a short video, and I've gotten some questions about how to prepare for the trading day, how to find setups, and I just want to show you how I do it. I'm not making any claim that this is the best way or the only way, but my approach is, I guess you'd say, kind of a top-down technical approach. I start from a big picture sense of the indexes. I look at commodities and currencies also. Then I drill into sectors, and from there down into individual stocks. To me, this is a more productive use of my time than randomly ripping through a couple hundred charts a day, which just doesn't really help me that much at this point. Um, so let's just, and I won't take you through the entire process because this is usually a 30 to 45-minute process for me, and it's not exactly linear. I don't start at step one and go down the checklist. It's more like I have a rough plan of what I'm going to go through, but I actually do a lot of kind of backtracking. Like, I may, you'll see when I get into this, but I may look at the weekly indexes and then go and look at currencies and then realize, oh, I want to go back and take another look at the weekly indexes. So, I think there's a lot of cross pollination and a little bit of creative thinking that goes into this process. But this is just the way I do it. And I'll also show you the indicators I use on my charts, which are no secret. I try to keep everything very consistent. And what I have here is on pretty much all of my charts, I have a 20-period exponential moving average. Regardless of the time frame of the chart, I do not change that. I have Keltner channels. You can use Bollingers or whatever you want. And this is a little bit different down here. I've blogged about this a little bit. This is each day's, actually it's each bar, but I use it primarily on daily, so I'll lapse into that terminology. This is each day's price change is a standard deviation of the past 20 bars. And this does color code for large standard deviation moves. It's just a way to sort of standardize and normalize, I guess you'd say, the price change, and that becomes important. You'll see how I think. So here's my daily process. I start first of all looking at the stock indexes, and you can see I have here S&P 500 and the Dow Jones representing large caps, the Russell 2000 mid caps and small caps. Then I have a microcap index. I do also have the NASDAQ composite, and I have 24-hour S&P futures, which I look at this especially in the morning to get an idea of what happened overnight with Europe. But the key to this is that all of these charts are time linked. So when I change the time frame, we're currently looking at monthly, and I'll flip all of these to different time frames at the same time. So what I'm looking for monthly is just big picture market structure. And I look at this every single day, even though I know what the monthly charts look like and they change very, very slowly. I still flip through these every single day. So a big thing here, I think, is you can see very clearly the strength in small caps off of this low. Look at this range here and look where small caps are sitting in this range compared to where the large caps. So, that's an example of the kinds of things I would look for on the chart. Then I will step down to weekly. And again, I'm looking for things like divergences. I'm looking for places where one index, and I've blogged about this also, various places, where one index takes out a high and the other one can't. Looking for relative strength, and this is just part of the process. And so here I'm looking at about 2 years of weekly bars. I will next drill down to the daily bar, and here's where, I'm sorry, it's a mistake. Here's the daily, and here's where I really start paying attention, because this is a little bit more practical for what the next day is going to look like. And we can see, first thing that jumps out here is that all these indexes had large standard deviation moves, 3.5 to 4 standard deviations. And I do see we are potentially a little bit extended here, but this is also good impulse out of a consolidation range. So I'm on guard always for a failure, but I'm going to lean long. Also, it's worth pointing out all of these indexes are cash indexes with the exception of the futures, so no ETFs here. The next thing I will do is I'll drill down into bars that are about a fifth of the trading day, and I see, you know, a big flagpole and a good bull flag. So again, this just reaffirms how I'm leaning long. I also, you need to notice that you will see a substantially different picture on the futures than the cash index, and spend some time thinking about that sometimes. At this point, I usually don't go down into 5 or 10 minutes or anything like that, because this is kind of a big picture overview. Next thing I will look at, I think this is very, very, very important, is I'm looking here at cash indexes versus the S&P cash index. These are Dow Jones sector indexes, and what this output here is a ratio of the index over the S&P. And what we can see here, if you read my Waverly stuff, I've been talking about, we were talking about the strength and basic materials off of this that kind of led this rally. We're also looking at strength in industrials from roughly the same time frame. And I guess beginning of November or so, we started to see some strength in energies, which have led. So what you're looking for here are general trends to show you where the money is going into the market. And I think this is really important. And we also see weakness here in utilities, a little bit of weakness in consumer goods, healthcare, and there's a lot of political stuff in healthcare right now, so that may not be crystal clear. It is interesting that these are your traditional, I mean, it's not interesting, it's obvious that these are your traditionally defensive sectors, so we might expect these to be a little bit soft as the market rallies. That's if I see a interesting setup here, and I don't really see anything that screams at me for tomorrow. This sometimes will have a real impact on the stocks that I look at for that day. One sector that has been very much in my focus recently is financials, because let me show you here, and all of these are also time linked. So these are currently weeklies, and you can see, let's go to monthly. I'm sorry, I don't really have the data for that. Okay, back to weekly, sorry. So, here looking at this financial ratio that never really recovered that well from the financial crisis. So that's one reason why I continue to think that there is potentially substantial upside in financials, but we just don't really see it happening on a day-to-day basis yet. But this is definitely something keeping an eye on. So I will look at these on both weekly and daily, as you saw here. Next part of my process is I take a check on volume to see how the day's volume, the NICE and the total volume. A couple other ratios that I look at. I don't really look at this gold to spider. I just put that up there. I am very interested in the relationship of this Russell to S&P ratio. And again, these are all cash. Apples to apples, right? You cannot compare, say, cash Russell to spiders. That doesn't make any sense. Also look at the ratio of the NASDAQ to the S&P. That gives you some idea. And you can see this index has been very flat, which also confirms what we've seen from tech, which is not a whole lot of outperformance or underperformance. So, that's pretty important, I think. I think this ratio of XL-wide XLP is a pretty big psychological sentiment indicator. And then the next thing I do is I have a universe of about 35 or 40 stocks that I follow closely that I will go through every day, and I'm not going to take you through that. I look at those regardless, but I also go through, I have several lists of, basically scans for the day. And the first one that I will go through is stocks that had large standard deviation moves. And that's what you see here. All of these are different time frames, so roughly hourly, daily, weekly, and monthly. The only thing new here is this line is relative performance to the S&P. So you can see, here ESRX was strongly outperforming for a couple years and fell. The fact that this is, basically flat was roughly in line for the second half of last year. It's just important to know that, to get some idea, where your leaders really are, what's been underperforming, outperforming. That's always what we want to know. Where's the money going? And of course, here we're doing some more traditional chart reading, looking for setups. If I find something interesting here, I will flip back and look. Here's more intraday information. So daily, half hour, 5 minute, and then 1 minute is not really important for this analysis. But I'm looking here for setups that I want to trade tomorrow. So I'll drop through a list of the stocks that had large moves on the day, and you can figure out, there's several different ways to do that. I don't think that a straight percent change makes a lot of sense. I think it has to be something that's somewhat normalized for volatility. And then the last list that I will go through, I have a list of, according to, I have a proprietary measure I use of stocks that are relative strength leaders. And I make sure that I know what's on this list. So if I see something comes up, one of these, either they're strong or weak in, intraday, I know that's a stock I probably need to pay attention to. And this list rotates, every other week or so. Things come in and out of it. This is kind of important too, I think. I know I'm dropping a lot of things here, but this monthly chart is log scaled. And I think that's, you want to keep your daily and probably your weekly even to just a linear scale, but you do want to see for the long-term price history, you want to use a log scale or semi-log actually. So I'll look at relative strength leaders, and then I'll go through and look at relative strength laggards, so I know what is weak and what's strong. And like I said, this process usually takes me about 45 minutes or so, and I make notes and have some ideas for tomorrow. And then I usually repeat a good portion of it in the morning. I have some things I want to look through. One thing I guess I did not cover is I also dropped through all of the major currency crosses and spent some time thinking about the dollar. And of course, thinking about the commodities, especially the commodities that tend to impact some of the stocks we trade, like looking at energies, of course, and metals. The ags are probably a little bit less important. So that's how I do it, and I hope that gives you some ideas. Most of you are probably doing something similar to this in some respects, but maybe there's some new ideas here and some things you can incorporate into your own process. Thank you.